What is going on, everyone? Welcome. It is Friday, July 31st, 2026. You're watching Trading Trends with John Salama, CMT. A little bit earlier version today. We're doing it usually halftime of the trading day. Today we're doing essentially at the end of the first quarter from U.S. trading. So these are all as of AM 11:20 a.m. Eastern time. So things can change. We're going to wrap up the morning. It was a big reaction to earnings as of last night. And lots of different stocks, mega cap ones going in different directions. We'll see where the push and pull is. Let's get right into it. Boopity bop. All right, so this morning, consumer discretionary blasts 3% higher due to Amazon. A massive 15% boost in Amazon. I'll take a look at the dashboard panel, which way the stocks are moving. But Amazon up 15, pulls XLY up 3. We've been featuring XLY due to the reaction on oil and retail, and of course what it has on the broader basket of XLY, a major S&P sector. Also Bitcoin and the gold miners today, ugly days for those groups, all down 3%, and new 52-week low in bonds, guys, across all the major fixed income ETFs, corporate and govs type, middle and longer part of the curve, 20 years plus, etc. So again, due to the relationship, price is low in bonds, yields are higher for longer, higher forever, and we're all expecting the Fed to hike in the next several months. And then really this is interesting, when you step back, this week was all characterized by about 6% gains in Chinese internet and consumer discretionary. So a lot of talk about consumer discretionary. Yes, Amazon did its heavy lifting for the day. We'll take a look though of what it's been doing this whole week, and also the move in KWEB. Is it a buy now? What potential trades are there, if any, to put on right here, right now? So without further ado, let's get right into it. Things are moving. Markets are reacting as we speak. Let's get into it here. Boopity. Rocco's looking up. Here we are. All right, so we'll get to the intraday tape in a second here. Wow, look at that. We'll immediately see technicals alive here right there at 10 a.m. But let's get first. Again, we've been talking about this with semis. You wake up one day, you wake up another day. You're in love with them. She loves me not. She loves me not. It's all about the he said, she said. Limp Bizkit shout out. But here we go. Micron down 5%. Yikes. Look at this. Amazon up 15%. Last I checked, this is a multi-trillion-dollar company. That's a monster move. Volatility is forever here in single names and what it means for concentration in the indices baskets. 15% on a multi-trillion-dollar company is insane. And here it comes again, down 9% on also a multi-billion-dollar company, a company that we were just defending the other day. Many people, as they hit all-time highs, Apple, or underinvestment, as you will say, in AI, and folks not being concerned about that in a way. Today, down 9% as a reaction. Microsoft up 1%. They had a monster, a big earnings report. So a lot of the earnings now are out of the way. Let's keep going. Google up a massive 5%. Boy, oh boy. Intel up 1%. Meta up 1%. And South Korea down 2% today. I'm sure we'll be looking at the end of the program. All right, let us get here into the intraday tape. We peaked in euphoria in terms of price here, not euphoria, straight up price at 746, half at 5 in the morning. So unless you're up with the chickens there, but I always pay attention when liquidity enters the room, and that's at 9:30 a.m. Ooh, look at that right there at 9:30. It put in the exclamation point and the cap of the at least 2 hours of this session at 766.30. And look at that, right to this. And you say, oh, what is this chart? Each bar is 15 minutes, and this black line is the 200 bar moving average. It always has meaning just based on catching ripples and reactions of motion. Okay, so that's charting, just really tests relationships, kind of, how long you do the treadmill. It's not unpredictable. I can put out a range on how you're going to do. It's the same thing in charting. It gets that 200-day for support at 10 o'clock, 10:15, and then bounces right up. And now what is it trying to grasp with? The VWAP, this orange line, or volume-weighted average price, every single price I have here since the past 2 days. So it's a very tight data size. So what I'm expecting for the day, pretty weak in terms of we got to the 50 RSI, and then immediately the seller said, you know what, I'm here again. You're probably going to be range bound. 739 is your support. They may not want to go home with risk. It's Friday afternoon. It's also month end. Could be, some month end buying, if you will. We'll see, but I do think we'll be somewhat tethered between 739 and 742 for the session. More importantly, zooming out, because I know a lot of technicians and everything I'm reading, folks are going every which way right here with the market. Are things about to break to the downside? And look out, you got I'm seeing stuff, 5% to the downside. I was just saying on my Monday or Tuesday video, I'm looking at 3% move higher in the markets through mid-August. So where are we right here, right now? So looking at what I'm looking at here, there's a 1-year chart, and I know if you saw the AI guy, what's his name, Ashton Brenner, situational awareness, he got wiped out, massive margin calls, and some of these names that he was in, he refused to sell Anthropic, and he lost billions, sold it to Citadel, I think not quite pennies on the dollar, but heavily on sale, and a lot of the leverage is what pushed us, essentially, in a way, to this record highs back on June 2nd for the S&P 500 at 7,600, essentially, in the futures, in the index market. So now you got this guy blown out. It's not just him. There's other funds as well. And what does that mean for margin calls and on the market and euphoria overall? That's just a little backstory in the narrative. I love the support here at 725 that's been dealing with us, that market, since we entered this overbought phase on May 6th into that gap up. If you recall, it was only a 1% move that day, and yet that has been the support ever since. It wasn't the ceasefires a couple of weeks after when we really got this crazy surge higher. What I'm looking at here still, I don't think it's going to be easy, and this candle today doesn't look super convincing. VWAP on today's session early at 11:25 a.m. Eastern here is 741.70. Underneath that for the day, a close there, and south of that, and I'm anticipating that likely a little bit weakness until Monday. Tuesday, it's going to take a little bit more grasping. I need S&P to hold and get to 743. And then truly, I do believe we would be off to the races. As I said on Tuesday, right within a dollar or two or three of the all-time high set from June 2nd. I think folks are going to think it looks like a little bit of a fail top. I don't think it's going to have quite enough oomph. We're going to get probably right here, and then it's going to look like a little bit of a rug pull back to around that 745 area. But for right here, I honestly don't change anything. I'm seeing a little bit, couple more days of weakness, it looks like, before these buyers fully grasp some buying and capital allocation pressure to the upside. But overall, I still like what I'm seeing overall. Well, if anything else changes, that's what I'm saying for S&P. Let's go in the hood and see what is pushing and pulling today as Rocco pushes and pulls off of me. Number one mover, we've been highlighting this a lot because of what it means for the entire market. We're 70% consumer economy. XLY, muy importante. What's going on, Rocco? He wants to get back up. Here is XLY. Let me move this out of the way. Today, a big 2 2/3 gain. Let me move that. There we go. So not the greatest looking doji right here. Why I'm saying that is because the VWAP is 115.42. It's just underneath it now. You don't want to give back a lot of the gains here, but this has been a rocket since it came into its support at 108. And I do want to say 108 is a very lowly support. It's just a couple of $3 or roughly 2.5% above the 52-week low when we were really in the early throes of the war at the end of March. So and exactly 4 months ago, actually, to the day. Also, the 200-day moving average is looking south here as it's starting to roll over. We said this before. I'm a believer in a dead cat bounce here. I did the video on Tuesday, and this was highlighted as an important part of the market. So right around here, I said it's going to move. Who cares about what I said? Let's go to what I'm saying here. I think this is going to move around 114. I'm not shocked that it's getting a little bit nosebleed territory. Don't forget, this rally has been 7 days in from 109 all the way to 116 today. Now taking a breather. Very important figure for the day is 115 even. Want to see it above that, rounding for simplicity's sake. I do believe in a dead cat bounce towards, honestly, about 119. I think it's going to get all the way up here. And then ultimately, when you rise to a falling 200 moving average, that's super difficult. That's like playing the Sixers, LeBron James, one-on-one, year 24. I don't think you're going to score too many bucks. So that's what I think is going to happen. I do think it has a couple more to the upside here. Trades that come to mind would be potentially selling the 120 August calls, buy the 121s against it so you could sleep at night. Alternatively, you can sell those probably it's a little bit spicy, but I would say the 110 August puts, buy the 109s or something like that against it to help subsidize the trade. You are crossing also above 50 RSI to 52. This has been right around here, 55 to be honest. This is where it's died every time since the end of May. So just important to note, Oh, look at that. You're getting a reversal as we speak here, as it starts to kiss away to 115.5 here. So you don't want to see a reversal of that. Lets you know this trade is getting exhausted here from 109 straight shot to 116. Don't forget, oil is still pretty rich. Those are the Sigma moves for the day. And that is because of Amazon's redonkulous 15, and that is a financial term, 15% move, and it's a huge weighting in this, as is Home Depot and Tesla. So that's going to lift XLY. Let's see what they're selling here, and it's in 3 areas that they are shellacking here this Friday morning before some of us head to the beach. Materials down 2.5%. It peaked on February 12th, the month before the war, at $54. Great looking chart here, though. Look at it, better than XLY. Rising 200 moving average. Your support is ultimately there at $49. Not only by the 200 moving average, but also coinciding with this low here in the middle of May. And also that price discovery into the end of March here, right after it worked off of this oversold condition. So I love that 4-month support line here in XLB. Short term, as you could see, bit of an oopsie here. Pretty much showed you was not ready for the prime time on the 28th. They got rejected at 52.75 and right down the 50. So I think you're seeing a decent relative strength breakdown here. I do think that was the end of its short-term run. I'm running that. It's materials. It's a lower vol instrument. I'm talking about $1 ATR or so for a $50 stock. So, not much of a move, or 2% or so all in each day. And again, this rally about, say, a week and a half went from $50 to about 52.5, pretty strong. You got 250 there, and now it's starting to get rejected. I don't like this for the next 2 weeks or so. I'm not going to believe it goes straight south. I do love the support at $49, to be honest. So selling those 49 puts is kind of jumping out at me. Alternatively, selling the 53 calls. Do understand this is $1 ATR stock or ETF, so you're probably not going to get paid absolutely handsomely for doing that risk. Otherwise, I do think this is headed south towards $49 floor in the next 2 to 3 weeks, with about a somewhat being tethered straddle to $51, if that makes sense. So a lot of ping pong here below these moving averages with the weight above, and then probably something at worst case to this and something like that, zigging and zagging. So frustration for the materials longs, and this is the third day of that happening. Next, it's an ugly day for the Bitcoin folk and crypto. Oh man, I don't want to say anything like I told you so or anything like that, but this got exactly to where we thought, the 50-day moving average on July 21st, and it ran out of gas, and now it looks like that's the ceiling above for it, and that's just technical analysis. I could do it on sugar, Microsoft, Bitcoin, orange juice. It doesn't matter. I'm just seeing that the buyers are rolling over, and they're saying, nah, I'm good. I'm going to rotate to something else now. However, I do have somewhat of good, decent news. Just in terms of cycles, I do think there has been a fair bit of momentum that chased into Ethereum, which wants to be constructive, as an overall backdrop for Bitcoin. I do think the top of the nearest short-term cycle here was on the July 22nd, that bullish accumulation phase. Believer in a 15-ish day cycle, although crazy vol for Bitcoin overall. That typically gets you, what is that, 8th and 7th into the August 7th period. Wait for this to base through the end of next week, somewhat with I'm believing in a floor of 33. Honestly, again, the 52-week low is 32.84. I'm a believer in this, honestly, with a 34 floor, maybe 33.5, and that's where my cursor is here, very close to the 52-week low, for goodness gracious. But after that, I am seeing a move towards about 36.5 for Bitcoin, for IBIT. So ultimately, if buyers absolutely chase, you saw them pouring into IGV, you see them pouring into Chinese internet, a lot of overlays, a lot of heavy correlation with Bitcoin. You think it gets going too, but those have earnings, Chinese tech as well as software here. Even if Salesforce's best days are behind it, it's a little bit different. They're still bringing in revenue. Crypto is just I don't know how much longer you're going to hold on to that trading card and hope someone, tulips you higher for it. So ultimately, if you do get to that, I'm just a pointer of the 50-day moving average here, and that is unfortunately at 37.30. So that's where they probably got over euphoric, and the sellers would rush in again, likely corresponding with a tops of 58 RSI, likely with a 55. But I do think crypto, look for it. Obviously, see how it trades this weekend. May go a little bit lower. This is not a convincing candle. They're exiting it here, down 3.5%. And again, just don't forget the 52-week low for IBIT, 32.84, just $3 away, under $3. So those are ideas here. If you're a bit of a a gambling man, I'm guessing you're looking at crypto, so you are. Trades du jour. Ugh. I really think it's going a little bit lower first. You can sell the 30. I'm sure there's still some vol in the crypto complex. You can sell the 38 calls in August and buy the 39s against it. I don't hate that trade. I don't really love selling of the puts because I do think it's going a little bit lower in the near term. Not testing a new floor, but I don't think it's obviously in this candle's telling me it is, got too big for its britches short term after that rally. And that is about it for the IBIT. They're selling it today. So they're selling materials. They're selling Bitcoin, which don't have a ton to do with each other. And also another name that we've been featuring, the gold miners. They're saying no thank you today, down 2.8%. And look at this chart. Very important happenings here in the gold miners. Why we've been talking about it? Because this has been top of my mind. It dealt with the oil increase. Again, it's not just gold. These are the gold miners. What is the biggest expense? Energy cost, running all kinds of different exploration projects, which require a lot of energy. They were dealing with it here, middle to end of May, specifically the 19th. It trades to its 200-day moving average, and it's been in purgatory ever since. And really, when you break these multi-month lows at clean $70, you're entering no longer purgatory, but Hades, as they say in the Bible and the Odyssey, which is a ridiculous film. Here, I think you reached an overbought sell territory. I see that for now as they're rolling over. You have a 200-day moving average that is now falling over. It's not Mexican standoff, staunch, dead at 87.5. It is now going lower by 3 cents a day. I do not like that momentum. The 50-day looks like it is a knife through a butter. And look at the rejection just short term here. Just 9 days ago at $78 and $4 lower. This does not look good. GDX moves in terms of volatility. Trades here jumping to mind here. I hate this ceiling here, or not hate. There's no love and hate. But you can sell the 82 calls. I don't think that is. I'm curious what the option chain would look like. Maybe we'll do that one time. We'll do like a shopping on the air show. Tell me if you have any interest in that. Where I look at option chains and see if there's any meat on the bone. If you want to do something a little bit spicier, be careful. You could sell the 80 August, but you definitely have to buy the 81s against it. I'm talking about the calls. Alternatively, you could buy the October. Give yourself time, like 67 puts. Don't hate that idea either, but I think this is going south for the next 2 weeks in terms of what it would look like. This is an ugly candle today, too, down 3.5%. That's why we're talking about it. This one slipped immensely from when I wrote it. When I read the doc this morning, it was down just half an hour ago or so. It was down 2.8%. So another 70 cents to the downside. I'm telling you, this thing likes to move. And once you break the $70, look out. The 52-week low is down here at $54. Be careful. That will start going lower. There's not a lot of support underneath that. This could for sure go towards $55 to $60. So those October 67s would be in the money very quickly. So like the downside on GDX here, I think this is, day one, essentially, for the next 2 weeks or so of weakness, targeting about $68 mid-Augusto. All right, top 3 gainers of the past 5 days. The best performing ETF in the entire world. Who knew? KWEB, number 1, 7.33% today, continuing to go higher. Look at this right here, getting into basically nosebleed territory, 2-month highs after it got rejected at 28.60 on June the 2nd. And then after that, hit a 52-week low. My goodness, KWEB, the best ETF of the entire week, up more than % a day today, doing almost just that. This now is very, very, starting to get interesting. Look at, again, you learn a lot from what happens when it gets to the neutrality point. Look what happens when it gets to 50 RSI. They stepped in and they bought, and now it's getting back into true nosebleed territory before approaching overbought. What it looks to me in terms of technical analysis here, and it's really interesting because you have a falling 200-day moving average. I do believe this has a decent trajectory. You look at the VWAP on this today and the candles. This is what we're talking about. XLY giving back a bit. Here, VWAP 2023, they said mine. And this one's hitting high of days as we speak. That's what you want to see. And also look at this. 5 green days in a row. Hence how you get to be the best performing ETF of the week. What I want to say here is it looks like the old resistance is becoming the new support here at 27.5. I'll point that right here. very important line and figure that goes back to early June, right at the beginning of summer or so here. I do believe that is our new support here. So it was support all the way through mid-May, and then it started giving out, and it was, decent resistance, and now starting to break away higher. I do believe this has a decent week and a half or so with there's traffic here at 30.5 that looks to potentially be the next stop. You can, you're a little bit late. I don't want to say late in the game, but for this part of the run, don't forget this rally started here at 26, so you're already 7-8% in. But this looks like you got a decent cup and handle here. You got about another $2 to go. Trades that come out would be if you think it's got more to go. And these candles look very constructive this week. I like the October 30 calls. Alternatively, you could sell the 26 August puts by the 25s against it. All right. Second best chart, ETF of the week. We are not going to go into everything if we already have a listed, already mentioned, and we have this one to open the show today. Was XLY, the second best performing ETF of the week, up 5% or 1% a day. Today doing up 2.5. So it wasn't just Amazon today, up 15%, launching this up 2.5. I'm paying attention to this candle due to the strength of this trend that started last Friday. Okay, this started last Friday at 109, up, and away. And now a bit of a Dikembe here. We'll see at 116. The figure, as I said before in the other segment, is 115. If you're really being exact, 115.35 here. Want to see where it is. You can check it at 3 hours, 3 o'clock, etc. I want to see where we are versus that. But total, a very, maybe served as a magnet to 117, but that would be as good as. All right, then lastly, haven't talked about this one in a little bit. The third best performer of the week, software. Boy, oh boy, up 5% or 1% a day. Today, absolutely flat. What is happening? Interesting looking chart here. Again, software. This is Salesforce, Monday.com to an extent, Jira, blah, blah, blah. This group peaked at the end of September, essentially at 118. Oh my goodness. That was when crypto was climbing towards 120. And we said, well, what crypto is looking to do or what it is doing. Hit a low April 10th. It had a bit of an oopsie here, a meerkat. Can't really get up because Rocco's on top of me. And it had 3 closes above that early June, above a falling 200-day. La-di-da. That's not really anything to be celebrated. And then got to a falling to 200 moving average, and not quite right after America's 250th birthday. And then you put in a higher low. Love to see that. And now it is the third best performing ETF in all the land. Chinese internet. You saw what happened with its 200 moving average. Consumer discretionary kicking butt this week. Thank you, Amazon and other constituents. And now software. So I believe it's going to be somewhat straddled towards about the 92 handle. When this group finds faith allocation, folks, leave it, and I'll just blame it for technical purposes. You have a falling 200 moving average, that type of velocity. I'm not going to try to be a hero there either. I could count on one hand the sessions above 50 RSI since early June. So that's not a great characteristic. The buyers aren't flocking into it. However, this is what's going to be really interesting. As we just said, Chinese internet, strong correlations with Bitcoin. We just found out the new, what used to be resistance is now looking to finally be support for KWEB after etching in 52-week lows and going through a lot of hell. This looks like to be, it's flat today, had an awesome week, up 1% a day or so. Don't forget, this rally started again last week at about $87. They took it all the way to 94 a couple of times this week. 200 moving average you couldn't see is 94.75. I believe this has another good week and a half. And the point I'm making with KWEB is this looks like it is going to head towards about, I'm a believer in this getting to, it sounds kind of insane because I'm just not a believer in software, but in terms of growth of it and this chart going absolutely higher, but that's what makes a market. This looks like it's headed to about this traffic E area of $96, potentially as high as $99 in the next week and a half. These types of names, heavily short interest, have violent bounces. And now you're also over 50 RSI for 3 days in a row. These candles are telling me there's got a little bit more to go. When they start to get smaller, the ball is bouncing off the table. I think this has as much as $99 if you are a gambling person. If you're going long software, it tells me you are. You can, in my opinion, go after the October. It's a crazy trade. The October 96 calls, if that's listed, sell the August 96s against it to help subsidize. Alternatively, this one's also spicy. You can sell the 86 August puts, buy the 85 against it. That's another way to play this move higher in software. Look at this. Also green each day since they started to pour into it last Friday. Let's see if it continues today. Right now, teetering on the brink. I think software's got a little bit more to go. We could be seeing a bit of a renaissance here. Chinese internet and software. Potentially then what follows after, I believe, would be Bitcoin. So they're rotating. You can't just bid up Mag 7 to the sky. Trees don't go to the sky all the time. Although you are seeing Amazon, a multi-trillion-dollar company, move to the tune of 50% like that. All right, let's keep going. What did they sell this week and said no thank you? And we said they were gonna. Natural gas, the biggest loser this week, down 5.5% or 1% and change a day. Today doing exactly that. A 52-week low 3 days ago when your boy said it was likely going to happen. Oh my gosh. So ugly candles here, down 1%, under VWAP on the day, no interest. Look at this, so weak. It gets to the 50-day moving average, almost impressive. Honestly, was that the 50-day here? No. That was a 20-day. That's a pathetic characteristic. If you get to the 20-day only, that's pretty weak sauce. If you get to the 50, that's I believe in you a little bit. This could have barely mustered to the 20 and rolled over. Nothing really to say on natural gas here. The best it could get was a 42 RSI in the last 3-4 weeks, and that's when it had an 11 handle. Again, the 52-week low came to 975 on Tuesday. Unbelievable. Look for it to base with a 9 handle. That's not saying much, with a floor down to about, 9.25 potentially. But I think it's going to get ready to, I don't want to say go, but I am envisioning a dead cat bounce to about 10.5 over the next 2-ish weeks. No trade, because there's much better things to touch than this piece of junk. Let's look at something different, much more constructive. Oil, USO, the second worst performer this week. We said last week, we said oil, there's definitely worse places you can own, but I said oil's a no touch until about, what I say, early to mid-August. I want to see market put in highs, and then I would touch oil, and boom, look at that. Dikembe on July 23rd, about 8 days ago at 142. Nothing changed. They did put in a floor at 118, and then had two Dikembes at the same level, 132 days ago, and today at 131, and now you're seeing it at 129 even, VWAP at 128.40, a bullish day 4 of 1%, but a bad week, which is why we're talking about it. I don't want to touch this one just yet. I think it still has a crappy week ahead, as this one probably drops to about, honestly, 123.5 to the 122 region. So I'm seeing right about 122 even. Worse if it goes below that 119. I don't think they'll drop it that low, though, and that will also likely coincide with that neutrality 0.50 RSI, a star performer. As long as the war is continuing to go on, I believe this will hold moving averages. I'm not just calling out for new highs, though. So likely first, we'll see where it rests. Other trades to do. This is always very headline driven. You can sell, the 136 August calls, buy, like the 137s against it. But again, you can wake up, we strike, they strike, and your account has adverse moves. So right size the position. Alternatively, and this is still not protected from a headline risk, you could sell the kind of like the support here, but these are all spicy trades. The 106 in August. Selling those puts. I don't think you're going to get paid a ton, obviously, though. It's $22 away. And last one for the week, they cream this one. The home builders down 4.5%. And just look at the weightiness of a 200-day moving average. This one's going down, but actually this one's just flat now at 106.92. The most recent movement had been up by about 1 cent or so a day, but now it's just flat at 106.92. It's been rejected several times, honestly, since July 7th at the 112 mark. And now, boom, is trying to find this floor at 103, the same way it has since the beginning of June. Home builders, obviously, as you see bonds, drop in price, rates higher. Not a ton of mortgage applications here. So I believe you're seeing a relative strength breakdown in the home builders. Messy chart, to be honest. I think I called for this one didn't hit. It's important to understand XLRE. I believe a lot of the REITs, those hit 52-week highs a couple of days ago. And I said, look for a divergence. Something's going to give. Bonds or real estate. The home builders, Lennar, KB Homes, all that stuff, these guys actually peaked in mid-February, a month before the war, and the chart's been crap. That's when the war started, ever since that. So folks just not really looking at buying a house, all things considered. I'm just looking at in terms of the price here. It bottomed May 19th at 93.5. This just looks messy for me. It looks range bound to me. Perhaps growing volatility. It could have a rise. My next bet is probably bases here around a 102 floor here. I'm not super convinced with that, but it potentially gives up to 102. You could sell the 101 puts in August. If you're more of a debit, you want to buy something. I do think the next move could be higher as they try to buy bonds off the floor. Rates would go down, and this group would get a little bit of a pickup here. But again, I think it's going to be somewhat tethered to about 108 and more frustration. Kind of want to sell strangles on it, something like the 112s, 100s, and just keep doing that as long as percent away from the 200-day moving average. All right, home builders got creamed though this week, down 4.5%, almost 1% a day, doing just that lower. Not super convinced. The VWAP last thing on this is 103.96. It is above that. Let's see if they stuck the trenches at 103. That could be your move finally towards a 107 in the coming week. All right, top 3 trades of the past 5 days. When you step back, when in doubt, zoom out. The best trades of the week. If you've been long Chinese internet, short nat gas, not much correlation to each other, and long XLY, so consumer discretionary here in the States, congratulations. You absolutely king-slayed the entire market. Now check back for my favorite segment, the top 3 trades of the past 52 weeks. And look at this. July 31st, month end. We are rolling in here into August next week. The top trades of the entire year, year over year. Number one, and it's a lot of folks focusing on this group. South Korea, number one, up 115%. But look at this. Hard times here. We said in last week's video, because this has been in our Friday wrap up every week, because the thing's been, the GOAT. It did peak June 18th. 2.5 weeks after the SPY did, if you recall. And then you had a bit of an important break here. It's important to look at. This break under 168. It had been the area from the former breakout when we entered this overbought period on Cinco de Mayo. And now, just this past 2 days ago, it sank all the way to a 142 handle. And look at this. What I'm paying attention to is a 200-day moving average. This thing used to be going up by, my God, like $1 a day. And now it's absolutely slowing down, which is not, super abnormal. But look at this. The buyers aren't even close to stepping in. We haven't been above a 50 RSI in South Korea since July 1st. So this whole month has been the month of no thank you, South Korea. It opened the month at 185 spot. Right now we're trading 158 and had a low of 145. So a tough, brutal month for South Korea. Now what going forward? Is the leader of the past year, is it over? Did they chop its head like Athena, also from that amazing movie, The Odyssey? This looks hideous. The candle here down 2% on the day. This looks, I'm just seeing something roll over here, lower lows. You could almost see like a head and shoulder. So if I had an overlay, if you will, you could see a neck here, a big head, almost like Cyclops, and also that same movie. Go see it if you have 6 hours of time. It is long. This looks like it wants to rest potentially to the new line, but here's the problem. Algos and programs are going to sift out that weakness, and you're going to be below a 200-day moving average, and where folks are going to go into new momentum like Chinese internet and potentially a crypto. That old support of 140 in CWY is now going to be new resistance. So that's what I'm fearful for. The money flow has been very questionable since end of June here, obviously, with candles like this, meaning money flow, those 3 to 4 o'clock hours. There have not been, and you can see it on the candles, they've been saying, yeah, get me out. This thing got a little bit too hot. I don't like this one for the next week or two. I think other parts of the market will get love. I don't think it's South Korea. I would look very, very carefully, and you'll know you're wrong If it starts to trade, if you have one close under 137 even, this thing, for real, you're getting warning signs because it hasn't been above the RSI since June 30th. If you start to get this, just straight up technicians, and this is how we call, for real bear market corrections, when the S&P breaks under a certain level, if you start to close under 137, legit look out for South Korea, and you're going to have margin calls and a lot of problems over there. And here, obviously, due to what it means for the AI and memory trade. Number two, in the past year, is the SOX. Oh, last thing, in terms of South Korea, like what do you do right here, right now? I don't like this one for the next week and a half. So it'd be like short-term, long-term. I would want to see things happen. So short-term, you could sell the August. Be careful with this one. This thing can go chop your face off. But I kind of like selling the 180 call. See if you get paid in that in August. I don't think it's rising above that anytime soon. Those are 3-week highs. Alternatively, it's going to be super expensive. It's a little bit in the money, so you get yourself a little bit of wind to your back. I would buy something like the 170. Sounds crazy, but the 170 puts. But again, there's going to be super expensive, probably better trades than that. But I do think this one goes a little bit lower and potentially wants to test a 145. This floor again, which has served as a floor since mid-April, the week after the ceasefire. Again, very weak relative strength in EWI for legit clean 4 weeks now. Number one trade in the entire globe over the past 12 months. Number two, SOX. So EWI is up 115%. Always used to love seeing it, pop up in the portfolio program rules, but hasn't happened lately, obviously, for sure in the past month with weakness after the peak. And now semiconductors, this is SOXX, different constituency allocation of the field versus NVIDIA. SMH is the heavy NVIDIA one. SOX is Micron, Broadcom, Taiwan Semi. You're getting everything. And I like the field. Looks like what is a clear top here on June 22nd at 656. And ugly movements 2 days ago with that ugly 5% plunge. And it took you all the way back to late April lows here. 200 moving average is rising. This has not been above 50 RSI also for the month of July. So the top names of the past year, this is when people in the market always get a little bit crazy because, it's all about time frame and who you are and what you look at. When the best trade of the entire year has had the worst month where there's no bids for the entire month, is going straight down, that usually can mind F people. So for right here, right now, I don't love SOX for the next week. This one looks like it's going to go south. And honestly, horrendous money flow since July 1st. Look at these candles. Any type of opportunity, look at how heavy they are. Each one with closing at the bottom. Look, very, very few green. You can see that here. That's the volume bars too on the sales. And at 50 RSI, they say no thank you. So that to me is a trend that is getting weaker. Don't like to see this weakening. This has to work. I'm all a believer in rotation. That's what drives the bull market. But the SOX AI story, the concentration in SPY, you do need this semiconductors and the AI story largely in part to work. The relative strength versus SPY, last thing on this, is breaking down. It's very weak for the first time, I would say, since I'm talking really weak, maybe like since November in this regard. So pre-war stuff. Pre-war. I'm talking like a civil, Victorian era. I'm talking March. Look for this to base and go lower towards potentially this 465 region again. I don't think it's done. It's trying to get off the mat here, off at 464. And ugly rejection again. Look at this. It got to 538 just yesterday, the 50-day moving average, and they said no thank you, and boom, a fast $30 move lower. So SOX, number two trade in all the world, but no bidders this month. When the year's trades, this is one of the reasons why that guy, the AI guy that looks like a robot, brilliant guy I heard, is getting liquidated. It's likely because of that. Best trades of the year, worst month. That's really tough to digest. My portfolio also has taken a bit of a hit. It's very hard to capture the moves all the time, obviously. The third best trade on the entire board after that, so it's the year has belonged to, I'm not talking about 2026. I'm talking about since July 31st of 2025 through today, 3 clear winners. South Korea, AI memory, semiconductors, NVIDIA and friends, and third, biotech, down 3% today, up 71% in your hearts. And for the year, don't sleep on biotech. Don't avoid it. When you see it being a buy, And I think it's happening right here. This is a very constructive. I'm glad we're closing on this. I don't love to see it going under 50 RSI. It actually hasn't been above it for a week and a half, but I am getting better signals. This one is beating SPY's butts since June 18th. You talk about a month that it did belong. Look at biotech in the green bars, okay? Since here, look at this. On the way to 52-week highs, overbought, and now finally it's an ugly day today, down 3%. VWAP is 150 on the dot, even. Let me see that again, sorry. For 148.40 rather, and they said no thank you to the tune by about $1.50. So ugly rejection today, but I like what I'm seeing a lot with XBI. I like the floor. Okay, so let's get into technicals. I love the floor here at 144. I kind of like the idea of selling the August 144 puts, buying the 143s against them, help subsidize that trade. I think you'll make money. Alternatively, I like buying the October or November 152 calls. I think those will pick up Delta fairly quickly. If you also want to wait for it to close above 152, that makes sense. That's a 21-day exponential moving average. Once you have the wind to your back, these moving averages will start to exponentially curl higher, and you'll get more strength coinciding with a 50 RSI as we head towards what I believe is a 165 target, or equaling or matching its 52-week highs for XBI. That's like a 20-point move from here. So I love that idea. If you do wait for the close of 152, don't buy that exact strike. I then would likely go the October 165 calls, or maybe November, since you paid less for the strike. You're going further out. You can go out in duration, and get the better, cheaper strike. So that would be an XBI trade of the year. EWI, looks a little bit weak. Stocks, looks a little bit weak. Biotech, I think its time is coming the next 2 weeks. If you're long, congrats. Of course, don't forget those single names inside of the biotechs can move hundreds of percent. Have an awesome weekend. It's going to be beautiful here on the East Coast, and we will talk with y'all August next week. Peace.